Hey guys, I'm Roger Harry and I am the Investor's Accountant, and welcome to this week's edition of Ask Roger. This is where you get to ask me a question and I'm going to give you an answer based on my 20 years of being in this business as an advisor to real estate investors. This week our question comes from Michael in Dunwoody. Michael writes, I'm just starting out and obviously cash is very tight. I go to seminars and they talk about how you're supposed to control cash, and then in the next breath they want $25,000 for training. What am I supposed to do and what am I supposed to believe? Well, the cold hard reality is we do live and die by cash flow. Cash is trash, but cash flow is king. And you've got to watch it in the beginning. But let me put it this way, if you don't get trained, you're in for a long, hard road. That training is an investment in your future. That's the way I look at it. And yes, between $10,000 to $30,000 to go through a training program, I see it all the time, and I believe in it because some of these things, guys, it's the best thing that you can do to jumpstart your growth on this. Now, that being said, these guys are also masters of the upsell. Go in, get trained. Don't buy all the bells and whistles. You don't need all the bells and whistles. What you need is the basic training, and then you need to go and get with your advisors, someone like me, someone like your attorney, your financial advisor, who can actually steer you in the correct direction to get you what you need, whether it's LLCs, whether it's tax setup, whether it's QuickBooks, all these kind of things. Now, once you've done that and you've gone through training, don't go out on your own. Joint venture with someone, okay? Get with an experienced investor. That's going to be worth its weight in gold. Yeah, you're not going to make as much money the first couple of times out, but guess what? Would you rather make a little bit of money or lose a lot of money on your own? Because, hey, most of the first-time deals I see are at 0 to negative profits. That's just how it is. Third thing, before you start doing all of this, I want you to get your own financial house in order. There are some things you need to understand. The first, I call it your burn. This is where you sit down and you say, okay, this is how much money I actually have coming into my house every month. That could be from a job, that could be from existing rental properties, that could be from self-employment. But I want the net cash coming in. And then you sit down and figure out, well, how much do I have going out? And that's going to tell you, okay, how much net cash do I have to invest to put into this company? This is one of the reasons I always tell people, hey, keep your day job, because if you don't have to feed yourself out of your company, you can grow it a whole lot faster. If you do have to feed yourself, then one of the first things in your budget is your salary. And at startup stage, that's really not a good thing. Okay, so get your financial house in order, calculate your burn. The next thing you do is put together your personal financial statement, your personal balance sheet. Get all the information there, and hey, guess what, guys? I have these things. If you would like a copy of a burn statement and a personal balance sheet that you can fill out, just shoot me an email or message me right here on this page. I'll be happy to share one with you. Okay? You fill those things out and then go see a professional like me. These are the guys that can show you how to rearrange your financial building blocks to where you can accomplish what you want to do in a much shorter time frame. So, I hope that answers your question there, Michael. If you want to get in on the Ask Roger, all you got to do is shoot me an inbox over on Facebook or Instagram. You can put a message right here, or you can send an email to info@investorsaccounting.com. Until the next time, gang, Roger out.